This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the datasets and the SPY for June 26, 2025. And with that said, let's go ahead and jump straight into the data. And I am going to quickly swap this to Wednesday's data. Now, there were a few key things here that were really important. So the building permits I don't really care about. Powell finished his congressional testimony. I didn't get a chance to watch it because I was in an appointment today, but the market didn't seem to react very well to it at all. But we did, again, hold a pretty good level. The new home sales is starting to become an issue. It's not something I care about too much right this second, but the home sales have been constantly coming in at a really, really low number. And I believe that's 3 different reports now. So it's just something to be aware of. Now, the 5-year Treasury yield pulled down quite a bit today. It pulled down to 3.8% from the 4.0. So that's actually a pretty massive pull down in the yield. Overall, that should be bullish for equities. Now, tomorrow's data. There isn't a whole lot of important data that's going to move the market, but we do have a ton of data sets. So let's just kind of focus on this one data set at a time. Now, this is something I kind of want everyone to either write down, make a note, do something. The continuing jobless claims, once that gets to the 2 million mark, which is, the 20,000 basically, 20K, or, I can't talk, 2000K basically, the 2 million. That is a very, very dangerous level, okay? And that's not so much dangerous for the market, but it's very, very dangerous for the economy. That is saying that the unemployment is basically skyrocketing, and that heavily suggests that the labor market is crumbling. So we've been seeing this, constantly climbing now. It's starting to get to a dangerous point. Just keep your eyes on it. The core PCE prices for Q1 are coming in tomorrow. The forecast is expecting them to go upward. I don't believe they will. I believe they'll be fairly close to the previous number, just because the personal consumption data overall has just been very weak, and we've been seeing that throughout the last few weeks now. The GDP is coming in tomorrow. That's probably going to be the main data set that moves the market. I'm really not expecting anything else to move the market unless we get a very obscure data print with the jobless claims, like I mentioned, or with the PCE prices coming in either extremely cool or extremely hot. The forecast, again, does have that kind of pegged upward, but I do expect it to be a lot closer to the previous number. So overall, I am expecting the data to kind of come in cooler, which means that that should be bullish for equities overall, but we will see. So 8:30, that's the pre-market. That's pretty much the main data sets of the day. Okay, that's the data that's going to move the day, unless there's some random tweet or some sort of random data set after the pre-market. Now, what is important is the 7-year auction at 12 a.m. or 12 p.m. And the reason why this is important is because we want to see how the treasury market is truly reacting to the data that comes out tomorrow. Very likely, we're going to see this pull down to about 3.9%. But if this data comes in hot for any reason, then potentially we could see this move, down to the 4% or even hold close to the same level, which that would be pretty bad for the market. Generally, the market wants to see the yields pulling downward because that's leaning towards rate cuts. Rate cuts are bullish because it injects more money into the market. So that's the data for tomorrow. Yeah, that's the data for tomorrow. Again, no major earnings. We did have Micron, I believe, happen today, but I'm not going to cover that. So, if you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal Gex and Dex market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And getting into the technical analysis, we're going to make tonight pretty easy. So we had a very, very controlled day, and essentially we were just sitting at a very set level. And the entire movement today was pretty much within $1.50 range, besides the initial push from the open. Now, we closed at 607.12, and the 5 mile is currently at 680, which means that the 5 mile tomorrow will very, very likely be opening around the 602, 50-ish range to the 603 range. That means that the upper bounds of the 5 mile will be around that 604 to 605 range. So make a reminder of that, make a note of that. That's going to be a very key level tomorrow. If we pull downward anyway. Just be aware of the 5 mile. It is pulling upward. That means the upper bounds is pulling closer to us. The 5 mile level is pulling closer to us. And the lower bounds is pulling closer to us. If the market wants to test the 5 mile, it can test the full level. That means we can go all the way from the 605 all the way to the 601. And that can be a fully bullish move. So just remember, don't freak out if we get a 5 mile test, because technically we did have the 2 days of the upper Bollinger, and on a full technicals, we should see this starting to consolidate downward. However, I do believe we will see it extend, and I'll talk about that in a minute. I just want to fully cover these levels. So that's the 5 mile for tomorrow. I'm not going to discuss the 10 mile because that's not really relevant right now. Either is the 20 mile, unless we get some massive sell-off. But if we get some massive sell-off, then you're going to be set up at the 5 mile due to this technical analysis regardless. So you will be set for that one way or another if you pay attention to what I am saying. Now, the upper Bollinger is at 608.01. It's very, very, very likely we are going to see that pull up very, very likely above the 609, potentially even the 610 range. Now, today we had extremely, extremely controlled buying and selling. And I'm not going to be able to pull up all the indicators right this moment because I don't have it all set up for that right now. I'll do that another time. But the gamma is extremely, extremely call heavy. That means that it is within the dealer's best interest to buy shares to allow those calls to be sold to have the premium. That's a big way dealers make their money, is selling into the direction. They don't really focus on taking a directional bet like a standard trader would do. So just keep that in mind. The gamma was very, very, very heavy today at the 607 on the call side. The put side was essentially non-existent. And I'm going to show you why that was. And we're going to take a look at the symbol VIX, which is, the volatility, basically meter. Now, going over today, with today being a somewhat bearish day on the SPY, we saw nothing but the VIX pulling downward the entire session. I mean, I believe, let's see the time frame. Today was from, yeah, we had this initial pull up to the 1751, and from that range we just sold off the entire day. Now, what is the VIX? The VIX is a meter to determine when calls are being written or when puts are being written. This specifically tracks the S&P 500, so that's the SPACs. We're trading the SPY, which is an ETF that tracks the S&P 500. So that this does directly tie into that. This is a tool that I use and many other traders use, but if it's going downward, that means calls are being written. And if it's going upward, that means puts are being written. So it's very weird to see essentially the market saying, okay, puts are not being written here. The gamma, very, very heavy on the call side, is also saying no one's even interested in writing the puts yet. And we had a very just subdued session on the SPY. Hold on, I'm trying to find. Very blind person. And within the SPY, you could see we slowly started buying upward, which would be that pull downward in the VIX, but it was just very controlled. It was no major movements. It was just pegged between a very, very tight range. Now, going over the structure here, and I'm going to open let's see, I'm going to open the 4-hour chart first, because there's something I want to show you all there. And I've been discussing this for weeks now, but the all-time high is the top of a major cup. Okay, it's extremely likely we're going to push that level within this current cycle. We were only, let's see, exactly 98 cents off. If I did my math right, I believe I did. I'm half asleep right now, so I apologize if I'm a few cents off. But essentially a dollar to 98 cents off. The top price, which for some people that might be fulfillment of the top of the cup, but for me that isn't. For me that means that we still have, a whole $2 to push right now. If we're looking at the market price overnight, it's currently at 607.78. So, I fully anticipate us to push towards that 609 58 range or 59 range. That's a gap that needs to be filled, and it needs to be filled on the upside. We're right next to it. We do have the liquidity for it, and essentially the entire day we were just building liquidity. This can be a head and shoulders. However, this can also be a micro cup. Okay. It doesn't look like it in this one. Having trouble with it. But this can also be an inverse head and shoulders. I'm not set on this being a bearish structure just yet. I can be wrong about that. I'm entirely fine being wrong. Again, if I am wrong, then we are targeting the 5 mile from this range. But I do believe we're going to break out. I do believe we're going to see the upper range of that 609, potentially 610, potentially even 611. With tomorrow's data, if it's cool data like I expect, that might be enough to send the market into that range to do so. Generally, the upper bound or the upper Bollinger is 2 days of being pushed into that range and going on the daily chart. Generally, it's a 2-day process. If you look at upper Bollinger moves, it's fairly consistent that it's a 2-day process. However, it's not always a 2-day process. Sometimes it likes to bounce right back up into the upper Bollinger. And whether it's a hunch, I don't know. But this movement hasn't been strong enough for me to really say, oh yeah, that's a very strong, convincing upper Bollinger move. The buying and selling was just not there today. No one was really selling as much of a bearish day as it was. There wasn't selling. People weren't writing puts. We have many other indicators that suggest that overall equities were holding their weight very well. So I'm not seeing the selling yet. Now, can that start kicking in tomorrow if we get some bad data? Yeah, absolutely. I feel like we're right in a range to where we can either have that major move upward or we're going to pull right back into the 5 mile. So that's kind of the anticipation I have. That's what I'm expecting. And what I've kind of told my group is, there's three different options or three different routes that can be taken from here, really. And either one, we're going to push back up into that upper Bollinger, and essentially this third day would be acting like that second day, so getting a higher high and then slowly consolidating downward. That's route one. Route two, we chop in this 605 to 607 range, build more liquidity, and start pulling the 5 mile towards us. Again, the 5 mile is like a magnet. It's either going to pull the market towards itself or it's going to repel. But sometimes the market can pull the 5 mile towards it by just chopping in a range. So if we sit in that range between the upper bounds of the 5 mile and the upper Bollinger, it's kind of just like no man's land. It's, really a nothing range. If that happens, then 2 or 3 sessions of chopping within that range, we'll see the 5 mile pulled within our range. So, that's not very likely to occur. I don't think the route of just sitting at that range is going to happen, due to that reason. And the third route would be, again, just selling off and pulling into the 5 mile, doing a 5 mile test and, moving from there. Because again, by all technical standards, we did do my upper Bollinger move. We did have the day one of securing the upper Bollinger. It pushed, above the level on the close. Day two, we did get the higher high, and it did pull downward, even though it was really, really terrible movement. Um, but again, we do have that gap right at that 609, 50, 59. I don't see why the dealers won't take it right now. There's no reason not to, unless we get data that doesn't support the buying. The ADL on the daily time frame has been slowly buying upward as well too. Even though today was fairly flat, and you can actually see that in the actual ADL. But if you take the ADL to, let's say, 30-minute time frame, it was pretty much buying up the entire session and then just hovering. So to me, this is somewhat of a divergence. We shouldn't see the ADL moving upward when the price is moving downward. This should be a consistent just downtrend in the money volume, or in the money flow, and that's not what we saw at all. So, yeah, I do think we are going to get the push up to the gap fill. I do think we get the 610, 611 range. And from there, we set up the upper Bollinger. Again, to set that up, puts 2 weeks out, call, you get calls a week out. Ensure those calls are super, super, cheap trash OTM calls, but still with close to the strike, but just make sure they're cheap. The likelihood that those calls are going to burn are very, very, very high. But that's how you do set this move up. So if we get the move upward, you set it up that way. If we get the move downward, I've discussed how to set up a moving average already. You set it up that way. So, okay, that's it. I'm gonna go ahead and end the video here. I hope you all have a great day trading tomorrow. Have a safe trading day, and I will talk to you in tomorrow's video. Have a good one.